Everyone, welcome to Genscape's PJM Winter Outlook. We're just going to get started right now. In terms of the kind of process for the webinar, there's a couple of just items I want to run through. First, you'll all be getting a copy of the slides here that'll be emailed out to you either this afternoon or tomorrow. Secondly, along with that email, there'll be a recording of the webinar that you can pass along to some of your fellow coworkers if they weren't able to join the call here today. Lastly, you also have, if you have any questions during the course of the webinar, on the right-hand side of your screen, you should be able to type in some questions in your GoToMeeting box there, and we'll be happy to get to those questions at the end of the presentation. So in terms of the presentation here today, I'm Brian McIntosh. I'm the Regional Director of the PJM team here at Genscape. I'm joined here by Diana Chiangwa, who is a Senior Analyst on the PJM desk as well. The agenda that we have for you today, we're going to first look a little bit back at the winter of 2013, the January-February period. Go over some of the most significant events, go over some of the weather that we saw. Then we'll start to dig into this coming winter. And for everyone's just information, when we did our analysis for the winter, we're primarily looking at January, February of 2014. I know sometimes the winter package, a lot of people will trade December through February, but since we're already kind of a couple weeks into December, we omitted that from the presentation. But if you do have any questions about this month itself, we're more than happy to answer any questions along there. We've already had a pretty busy morning here going over all of the natural gas volatility in PJM in the Northeast. So for the 2014 look, we're gonna look at the weather. We have our internal forecast there. We're going to take a look at some generation outages and provide some analysis there, and then we'll get into some transmission outages that we feel might impact the grid over the coming months, and then we'll summarize that all up and answer any questions that people may have.
All right. So to start off here, we're going to look at the winter of 2013. Just starting off looking at the weather in terms of temperatures. Here you can see that. Pretty much across the entire RTO, we had pretty normal to slightly above warmer than average winter temperatures last year. Especially when you look in the Northeast, you see pretty warm temperatures, especially in New Jersey. And then in terms of precipitation, you can see here that for the eastern part of PJM, really, it was normal to slightly below normal precipitation. And then when you look over on the western side of PJM, so including Chicago and parts of Ohio there, you can see that we had just slightly above normal precipitation. And then here we're now looking at how the entire winter panned out. So we're looking at the PJM RTO demand as well as the West Hub on-peak averages for December all the way up until February, and also the spot gas Petco M3 prices. So as you can see here, on average, it really was a pretty mild winter. We started off in December with LMPs for the West Hub averaging just around $33.75. During the on-peak there, and then going up to $41.67 in January, and slightly coming down in February to around $37.57. And when you compare this to the winter of 2012, you can see that slightly, just a little bit stronger, and the main difference there is the demand. We did have a bit higher demand in 2013, as well as stronger gas prices. Another thing to keep in mind is that really strong week that we had where we have $120 pricing. That was the week of January 22nd, where we had our strongest demand for the winter of 2013. So the strongest day was January 25th with a price of $120.26, and the gas price during the same time was $12.49. So that really did drive that volatility that you can see in that blue curve showing the LMPs for the West Hub. And then moving on to just highlighting some other significant events of last winter, just as we start to compare these two winters. One of the main things that we had last winter was the Roseland to Whippany outage, which drove some Reddington to Roseland, as well as Bridgewater to Middlesex, 230 kV line congestion. This was in PSAG, and we got really bullish prices for most of the winter, with PSAG pricing averaging over $57 during January and February. In addition to that, during that very cold week of January 22nd, we also had really bullish congestion on the Cloverdale 765 kV transformer, which added some more upside to the West Hub prices, as well as drove DOM prices to as high as $428 per megawatt hour on January 25. And another thing to just keep in mind is this was before EKPC joins the PJM RTO, so there will be a deviation when you look at these load numbers by about 2 to 3 gigawatts in load. And over to Brian.
Thanks. So now let's start to think about the upcoming winter season for January and February. So what we have a team of internal meteorologists that forecast demand and forecast temperatures on a daily basis. And so we had our meteorologist team look a little bit further out and looked at the upcoming 2 months. One thing that they noted was it looks like January and February do look below seasonal compared to the last few winters. When you break it down by January and February, you can see that January looks to be colder than February, or at least more below normal than February. And the bulk of that cold weather really looks like it's centered in the ComEd AEP region of PJM, while your eastern part of PJM, the Mid-Atlantic and PJM South, is probably a little bit closer to normal conditions. Now, as we get into February, we're seeing slightly below normal conditions all the way into the eastern portion of PJM. It covers all of Pennsylvania, portions of Maryland, and in New Jersey. Now, when we looked at the risks associated with our forecast, I mean, we do realize that there may be some risks there that are slightly that would drive this forecast a little bit warmer. We looked at some of the other vendors and looked at how they were forecasting the upcoming couple months, and while some are slightly warmer than us, one thing that we did note was consensus isn't very high between all the vendors. There's kind of a wide range of forecasts, and so it wasn't a situation where our forecast of below normal conditions is really an outlier. It's really just a situation where there's no real general consensus between all of the weather vendors. So we feel confident about our below normal forecast. Another thing that we look at when we look at the winter months is heating degree days. Now, most of you may be familiar with this term. For those that aren't, it's a way we kind of measure daily temps and compare them to the building heating requirements over the winter. So to calculate this, you really take kind of a base temp of 65, subtract it from the average day or the average temp of that day, and then you add those on over the course of the month. So what we have here on these bar graphs are each of the kind of 4 major PJM cities: Philly, Richmond, Chicago, and Pittsburgh. They each represent a different color. And on the 2 bottom graphs, you see January and February split out. Now, we looked at each city over the course of the last 5 years, and we looked at how many heating degree days there were from 2009 till 2013. we took a look at what our forecast was and what that would mean to heating degree days. When you have more heating degree days, you have colder temps, you have more potential risk for volatility within the energy markets. What you can see in January is it looks like pretty much across all of the cities, we anticipate to have more heating degree days this winter than the last two. If you go back to 2010, 2011, then you see that this upcoming winter probably looks a little bit more similar, at least when you're comparing this January to the previous two winters. Now, when you get into February, you can see that the heating degree days for 2014 look to be pretty similar to last year. So I don't anticipate a major increase in heating degree days from last year to this year in February, but I think January is a spot that you might see a little bit more cold weather and a little bit more volatility than we did last winter. The last thing we did with our forecasting was we looked at historical coldest temperatures and peak demand, and we tried to get an idea of what time frame that peak demand and coldest temps are going to occur. So we looked at over the last 30 years, and we looked at the kind of six of the major cities within PJM and identified on average where the coldest days occurred for each city. And so when you look at the kind of western cities up the top, you can see that between Pittsburgh, Cincinnati, and Chicago, the coldest days typically fall on average between January 19th and January 23rd. Now, it's a little bit different in the eastern half of PJM. When you look at Richmond, Philly, and Baltimore, D.C. region, that coldest day typically occurs in that January 16th to 19th time frame. So I think the thing to take from these charts is really that, that second and third week in January, that's where historically we've seen the coldest weather among the major cities within PJM. And it might be a little bit earlier in the east, a little bit later in the west.
So now we're going to talk about the generation outages that are forecasted for the next 2 months. So we start off by comparing these outages with what we saw last winter. As you can see, this winter we do have slightly more outages in the next 2 months. So we start off in December here with about 7.2 gigawatts of generation on outage. This is a total for the entire RTO. These fall in January to around 2.7 gigawatts, and they pick up again for the month of February, coming up to 6.6 gigawatts. Just some things to note looking at this graph is just in the beginning of the winter in December, we have more outages in the eastern part of PJM, and then as we go into February, there is a switch with most of those outages concentrated in the western region. And then zooming into those outages week by week for this winter of 2014, we can see here that we just, again, have on average more outages this year than what we saw last year. And this also illustrates the same trend I just mentioned. We have more outages concentrated in the eastern PJM during the first few weeks, and this does switch over to the western region for the remaining for the last weeks of February. And then here we just zoom into the different nuclear outages that will likely cause some challenges for the RTO. These are all in February, so February is the month where we foresee some challenges for the transmission network, which Brian will elaborate in the next few minutes. So first we have Davis-Besse, which is in Ohio, 900 megawatts of nuclear generation. The nuclear unit goes out at the beginning of February, and at the same time we also get Calvert Cliff going offline for a couple of months, starting in February as well. And then over in ComEd we have LaSalle, that's 1.1 gigawatts of generation, which will also go on maintenance for the month of February. And then other changes just to be aware of, we have 164 megawatts of coal-fired generation in DPL, which is scheduled to retire on the 31st of this month. So we will have slightly less generation available for that zone, and we already have pretty limited generation within DPL, so this does come with some challenges, which again Brian will touch upon in the next few minutes. And then in terms of demand response, unlike the summer of 2013, in the winter of 2013, there were no emergency DR events that were recorded in PJM, so we're not really anticipating any of these this coming winter. And that's about it.
Great. So let's look at some of the transmission and congestion scenarios for the next couple months. The first piece we wanted to touch on was over in PEPCO and Dominion. What we're showing you here is a map of power flows from West Virginia in toward Northern Virginia and the DC region. There are a couple of outages that are scheduled for the coming months that I think are worth noting and that can present some challenges for PJM over January and February. The first is ongoing work that many of you may be aware of, but it's the Mount Storm Dobbs reconstruction work. It's up on the top of the map. It's a 500 kV line from the Mount Storm generators over to Dobbs. That line has been in and out of service over the last year or two. They're doing some major reconstruction work on the line, and it's scheduled to be back in service at the end of May for the summer months. And I believe the completion of the work is scheduled for 2015. The other outages that we want to touch on, the first is down in the bottom left-hand corner. That's your Bath County to Lexington. It's Bath County is one of your biggest pump storage unit within PJM. We think that there's some risk there with when you take that line out of service. It's going to be out for starting in early February through mid-March. If you get some cold temperatures there, especially in Virginia, you're going to rely pretty heavily on the flows from Mount Storm down to Valley. And when you get to Valley, a lot of power tends to step down there and start hitting some of the localized load pockets in Northern Virginia. The time where you're most likely to see congestion there is really in the morning hours when the Bath County unit is still pumping, basically still consuming power, and during the time that there may be the actual demand is starting to ramp up. There are times where that necessarily the timing doesn't coincide perfectly, and when that happens, you'll get a lot of demand in Virginia, really strong flows from Mount Storm to Valley, and in additional stress on the Valley transformer or the AP South interface. These would give upside to the Dominion load zone, the PEPCO load zone, and the West Hub price itself. The third outage I wanted to touch on was Pleasant View to Dobbs. It goes out at the end of February, so it doesn't touch a lot of the winter, but it's going to be out through all of the spring. And so we wanted to mention it just so people had a heads up. The Pleasant View to Dobbs is really one of those lines that flows power. It can go north to south in kind of northern Virginia, and again, it still drives the risk for AP South, Beddington, Black Oak interface, or potentially like a Dickerson Pleasant View. All of these constraints would be upside for West Hub pricing if and when they congest. The last outage we want to touch on, Diana mentioned, was the Calvert Cliffs nuclear outage. It's scheduled to go out that second week in February. It's on the far right-hand side of the map. Calvert Cliffs is responsible for sending a lot of generation up in toward the DC region and the southern BGE zone. With that unit out, again, you're going to rely on more power coming into that region from the west. I'd say with that unit going out at that time frame, you definitely want to watch for some cold weather in the Virginia, Pepco, Dominion region at that time of year. If you see that, you could see some volatility in the pricing. The second region we want to touch on is DPL, the Delmarva Peninsula. It's kind of its own little isolated region within PJM, but when we do see congestion in that region, it can be pretty significant to the upside for the DPL zone and also for the East Hub price itself. What we've shown here on the left is kind of a map of the power flows of the zone itself. In the top left-hand corner, you're kind of seeing northern DPL and the way power flows. Now we have a couple important outages in that zone starting in a few weeks here. The first one is on the 6th of January. It's Cedar Creek to Milford. It's kind of your top right side. You'll see that path flows power down along the eastern part of DPL. And when you see that line go out, you can see stress on lines like Church to New Meredith, Church to Townsend, Vienna to Steele, Cedar Creek, Clayton. All of these would be upside to DPL and to the East Hub. Now, the similar type of risk continue in February when the Milford to Indian River line goes out of service. Again, you're basically taking out the right-hand side of the power flows and putting additional stress on the western side. So you may see some risk there. Now, what you want to look for when these constraints may start to appear is really during your high demand days, and you also want to look at the day-ahead commitment for the Mid-Atlantic. If you see that for some reason, if the Mid-Atlantic does not clear is high in terms of its day-ahead schedule versus what the real-time forecast is, that typically says that zones within the Mid-Atlantic may need to call on additional generation in the real time. This poses a challenge for DPL because they only have limited resources in the area. So there are times where they need to call on some pretty expensive units in that zone. The bottom right-hand map is really just showing you some additional flows. We've seen a lot of congestion on Vienna to Mardella in the past. We've seen Kenny to Stockton or Indian River, Piney Grove. We wanted to give you these maps just so you can get an idea of when you see outages in DPL, this may be a good reference point to really understand, okay, if I take this line out, what are some of the other lines that are doing it similar or have similar roles and may end up having to handle additional capacity. We highlighted a few other constraints for the months of January, February. I went over the majority of the ones on here, but we also want to give you a table that gave you the impact on the various hubs and zones. The only one I didn't touch on was the two I didn't touch on were Bagley to Grayston, which is a constraint you see quite often in Baltimore. I think nothing has really changed over the last month or so to rule out that outage or that constraint. And the next one is going to be your Elmont transformer. You have an outage starting in the first week in January, going to be out for the first 2 weeks of January, and the parallel transformer there would be one to watch for. Again, it would give upside to Pepco, DOM, West Hub, while pushing down on the AD hub. In February, we touched on all of these constraints. The only additional one I wanted to mention was we do have a large 765 line scheduled to go out from the start of February through early April. That's your Rockport to Sullivan line. It's in AEP. The constraint you may see would be like Bunsenville to Eugene is one that we see, and that would give upside to AD prices and downside to the NI hub. So to wrap up our webinar here, just a few things to take away. First, on a weather point we wanted to make, we're expecting to see below average winter compared to the last few years. The greatest anomalies look to be in PJM West and ComEd, and most likely due during the month of January. Now, one thing we want to touch on just here, because it's been such a big deal in the last 24 hours, is really the gas pricing and what we've seen here. With these cold temperatures, one thing we've already seen the last couple of days is you can see some gas constraints due to this. And when you have really cold temperatures, especially in the Northeast, you can see gas pricing really push up these prices. What the chart that Diana showed with that week of January 25th, we did see some really high gas prices due to some gas constraints, pretty similar to what we're seeing in tomorrow's gas market. I think the one difference between last January 25th and tomorrow is we had some really winter weather in terms of snow, sleet, just really unsettled weather that drove lighting load throughout the day and really drove prices up. Tomorrow is going to be a really, really cold day. It's just not going to be as overcast. So while I think tomorrow is a pretty risky day, I'm not sure that you'll see the extreme lighting load that we saw yesterday, or saw last January 25th. The second point we want to touch on is coldest weather in the west. Seems like it typically occurs in that 19th to 23rd of January timeframe, while the east, you typically see the coldest weather during the 16th through 19th. We touched on, or Diana mentioned, a few major generation outages, Calvert Cliffs and Davis-Besse, both occurring in February. The one point I wanted to touch on with Davis-Besse is it is important for the ATSI zone, and so if we do have some cold temps in Ohio, that outage could present some challenges for ATSI. And then last, we touched on a number of transmission risks for Pepco, Dominion, BGE, tied to the Mount Storm Dobbs and some other 500 kV outages. And we also walked through some DPL risks for the coming months. Now, in terms of, I'm assuming a lot of people are familiar with Genscape and the Market Intelligence Group. If you're not, we publish daily market intelligence reports for the short-term markets, looking at the balance of the day, the next day, out through the next week. If this is something that appeals to you and you want to get an opportunity to look at some of our reports and talk to some of our analysts, please reach out to myself or Diana. We can put you in touch with our sales crew, and they can line you up with a free 2-week trial, and we can show you some of the stuff that we do on a daily basis. In terms of questions, I think we have just a couple.
All right. So the first question is really just about those gas prices. No, you just touched upon those ones. Do you want to clarify some more things about it?
Sure. Yeah. I mean, the thing about PJM gas is it seems that we have plenty of supply, and we should be able to stay in that kind of $3 to $4 range. But the issue really becomes on days like today and tomorrow when you're getting these extreme cold temps and you see the New York and New England gas prices really shoot up. It kind of just gets a trickle-down effect into PJM. So we're forecasting for tomorrow a day ahead of about $80, and then a real time in the mid-70s for the West Hub pricing. I think there's a few things that these high gas prices can cause, and the first is really a strong pull from west to east, because you have a lot of baseload generation still in the west that have little impact, or are not as strongly impacted by these high gas prices. They'll be called on, and they'll be looking to flow east to kind of help offset these really expensive gas units in the east. So it's something to watch for. I think gas will kind of settle back down for next week, and that will be the kind of the general theme for the winter. But I would not be surprised if we do have some more weeks like this in January and maybe a touch in February where the gas prices get fairly expensive just based on New York and New England.
Okay, so the next question is about ATSI generation. If PJM has to approve outage requests, why would they approve a Davis-Besse outage in February?
Mm-hmm. So one thing that we noted in, or PJM noted about the volatility we saw in ATSI this summer is it wasn't tied to reserves or issues with the amount of capacity online. It was more due to transmission and reliability that caused the demand response. So I'm not surprised that PJM approved the Davis-Besse outage. It's something that's been on the schedule for a while. It may be delayed a few days if there's some extreme weather, but other than that, I think it's really just you want to think about February and say, okay, I understand this Davis-Besse is going to be out. Now, as I look at some of the short-term outages, are there any line outages that are on the schedule or coming up that may restrict some of the power flows because they'll be a little bit short on generation because you have 900 megawatts less power online in that region.
Okay, so the last question is, do you see any risks from the generation retirements in APS? And this, I believe, is in reference to Hatfield Ferry and Mitchell.
Yes, yeah. So yeah, Hatfield Ferry and Mitchell came offline a month or two ago. Our initial analysis, if you were with us in the fall outlook, is that it would actually take some pressure off of the Beddington-Black Oak interface. We've actually seen a decent amount of congestion on Beddington-Black Oak over the course of the fall. So I don't necessarily think that there's less risk on Bedblaw anymore. I think you still have a good amount of stress being put on that Beddington-Black Oak interface, especially knowing that you're going to have Mount Storm Dobbs out for the winter months because the Bedblaw interface and Mount Storm Dobbs kind of flow along a very similar path. So those retirements, I don't think they've necessarily had a major impact on making energy costs go up a lot. I think there's been plenty of other resources in the supply stack to take its place. But I also thought that taking those off would limit some of the interface risk, and that necessarily hasn't been the case. So we've kind of rethought that a little bit, and I think there's still some risk on your Beddington-Black Oak. Great. I think that's all the questions that we have. When we sign out of the webinar, I believe you'll be prompted to a survey. If you have 2 or 3 minutes, we'd love your feedback on if this is the type of stuff you want to hear. If there's other aspects of PJM you want us to touch on, we'd love to get the feedback on that for future outlooks. But we thank everybody for taking the time this afternoon to listen in, and we hope to hear from you in the near future.